First of all, I'd like to welcome everybody to the CME Group Trading Challenge for 2018, and on behalf of CQG and Dow Jones News, I'd like to welcome you. And I want to start by saying that our objective for this program is to offer students an opportunity to trade the markets in real time with real data, real news, commentary from noted specialists, the same exact way you would be trading if you were trading for a company or yourself privately. So that's our objective. Now, the first thing that I want to do is show you how to make sure that everybody has downloaded the system correctly, or have downloaded it, and has gotten a login or password. And if there was any problem with the login and password, that they have notified CQG, and we have changed that. So to start, just to make sure that we're in the right place, is I'm going to the web, which takes me to CQG, and we can go to products. And while we're here, I want to talk about what we have, what we're going to get. So what you got so far is the what we call the CQG Integrated Client, or IC, and that's what we're going to go over today. But in the next couple of days, you're going to get a simulated login. And with the simulator, I'm going to show you how to go from where we are to the correct settings. Then everybody on the team for the practice round will get their own trading login. And why we're doing this is that this will allow one person to use the integrated client, but the remaining people on the team to use CQG Desktop, which is a version of CQG that's in the cloud and can be brought up from any cloud-based interface, as long as you're on the internet. And I will give you, or when you get it, and I'll give it to you anyway, the login to get it. It's mdemo.cqg.com. And again, when you get your simulator logins, you will get instructions. And then just to go, and that can be brought up on either an iPad, a tablet, a phone. We are also working on getting at least the iPhone app available before the competition starts, which is it's similar, but it's actually an app within the iPhone. So everybody during this competition will be able to access data, and they'll be able to trade, and all the trades would be put together. So that's start number one. Now this is the iPhone. This is the IC, the CQG Integrated Client, and I'm just going to mark this. I'm going to work from here to start, but we're going to start with a quote page. But I wanted to give this first. So I'm going to start by setting up a quote page, and then then I will show you how to go into correct the settings. So the first thing we're going to do is to open up a quote spreadsheet. And I'm just going to replace this with EP And what I'm doing is I'm putting in the symbols that you'll be using for the competition. CLE is crude oil, natural gas. EU6 is the euro currency. And USA is the bonds, United States Treasury bonds. And in addition, we have ZCE, which is soybeans. And we have wheat. And GLE, which is live cattle. And I don't think I forgot any there. Currencies, fixed income, agriculturals. Oh, gold. Can't forget gold. Whoops. And gold. And again, these things are all customizable, but what we have here is last quote. Whoops, this is, let me put that in again. That's better. And this is last quote. And this is percent change for the day. And this one happens to be set up on bids, offers, and the size of each. Now, by the way, if you have a question, please type it in and I will try to answer it as soon as I can. You don't have to wait to the end because as we go through material, I'd rather have it when we're talking about it. So this is our quote spreadsheet. Now, before I go any further, I want to go up here and I want to show you, well, let me open up a trading interface. I'm going to open up an order ticket. I'll be showing you some other ones before the session is over. Depending on what you're using, some of them just take more space than others. If you have the screen space, the easiest to use is the order ticket. But a lot of people will use what we call the DOM ladder simply because it takes less space. I'm then going to open up a chart. I will change the color on this in a minute because it's not my color. And again, you can size this any way that you want. If you want this to be smaller and the chart larger, you can. We're going to do a lot more with the charting in a little bit later. Now I'm going to go into this little CQG icon, and I'm going to window, link window, and I'm just going to click it, and I get a square here. Then I'm just going to click at the top of this one and the top of this one. And then I'm going to right-click to turn it off. Now, all I have to do is click on this, and I get the chart, I get the trading interface, and even a list of my working orders. Now, remember that everybody's going to be looking at this at the same time. We'll be able to link this, but everybody's trading will come up together. It's not just this one because everybody will be online. I'm going to actually log into my interface. Let me do this one first. Then I'll probably have to change because I'm going to change the settings. Oops, wrong one. You'll be able to go to our website at cqg.com, and you can put in, I'll show you. I'll actually show you where you can get to them. It's the same place you went to log in here. And once the recording of this webinar and more to follow, though they'll be similar, you'll be able to listen to it there any time that you want. So if I click on natural gas, now I get natural gas. This happens to be a 1-minute chart. We're going to talk about charts. And here's the depth of what they call the depth of market for natural gas. And I click it again, and this is the bonds, the U.S. Treasury bonds, and whatever. And I just keep clicking, and it changes the chart. So once I set up the chart the way I want to, and the trading interface the way I want to, then I should not have a problem with it. Let me just change the account if I can. What you're seeing is what we would do if we had multiple accounts, and now you can see that this populated. I was on a account that didn't have this. So this is your basic layout. Now, the first thing that we're going to talk about each one of these separately, but the first thing we're going to do is when you get your CQGIC, it's going to be in demo mode. Actually, I have to log out first, so let me log off. This is how it's going to look when you get yours. I'm going to just log in demo. See, you can't fill in anything here. Okay, now, when you get your simulator account, when you get the account and whoever the captain of your team is, they will be getting enough simulated accounts for everybody on the team, up to 5. And what you'll do is you'll log off of demo. Then I'm going to go up to setup, and I'm going to uncheck demo. Then I'm going to go back up to there, and I'm going to go to connection preference. And this is actually already set correctly. But when you get yours, it's going to say www.cqgtrader.com. You'll have to go in there and just take out the www and type in demo. So it should read demo.cqgtrader.com. Now, I will tell you that anytime during the competition that you go to log in and it doesn't take your login, the first thing you want to check is the connection preference and make sure that it didn't defer back to www. Then I go to log in, and this time it's asking me for a login. This is where you put in your simulator ID and your password and hit OK. So then you'll be in, I did it again. Then it'll be in trader mode, and you'll be able to trade. So just briefly, log out of demo mode, uncheck demo trading, go to connection preference, and make sure that it says demo.cqgtrader.com. Now, you will also have access to the news headlines, and this will allow you to take a look at the news as it's occurring. If there's a report that's coming out, you'll see it here. And you'll even be able to go up here to the calendar of events, and you'll be able to see what reports are coming out. And you can set this up to show you only the USA if you're looking at the American contracts. Also, you will be given a login, and let me see if I can remember what mine is. No, I don't remember. It might be Stan, but this is a really neat thing. But Dow Jones will issue everybody or every team, because it's only on the IC right now, a all right, that's okay. This will take the stories and break it down into almost like a Wall Street Journal, where they'll look at the important stories, and you can tailor make it again to make it look like any way that you want to. But it won't work until you'll get from Dow Jones a login that will allow you to log into the Dow Jones News Plus. But it's really cool because it allows you to analyze the news. So I'm going to start with each of the quadrants here, and if you right-click, hold on a minute. You can customize your columns by adding almost anything into this that you want. And actually, this is a QSS. I would actually pick another one I wanted to show you. So if you can give me 1 second. Because this one is much more powerful. I just hit the wrong one. And I will type it in very quickly. And this will allow you to see your trading, your bids, your offers, almost anything that you want to see. This is called QSS 2.0. If it comes in, it seems to be clouding up my system right now. Okay. And then I'm just going to real quickly put in the same. Now you'll be able to trade any of the months that you want. However, you have to be aware, and we will let you know, but you have to be aware when the contracts expire, because there's a nice steep penalty for trading a contract that doesn't exist anymore. It's not half as bad as the penalty you get if you're actually trading and you're in a contract that no longer exists, because now you have to go and find somebody who's willing to buy that product from you, because unless you're in the business, you can't take delivery. So you got to be very careful not to be in a contract, you'll be sent. I'm not exactly sure of the procedure at this point. I believe that it'll come through the CME. Dow Jones will send it to us, and then we'll send the Dow Jones logins out to you. Now the news you'll get without it, but to get the News Plus, we have to get that from Dow Jones. So this is the first time we've had to do this, so I'm not too sure of exactly how it's going to work, but it will work. And they'll send it to us, and we'll send it back. I'm just making this one a master as well. Okay. I'm actually going to leave this one and close this one because this is the one I want you to use. And then you can go up here and you can add columns, and this is called the picker, and you could put in trading, and you'll get the trading icons, but you can see that there's probably 250 different things you can put in your spreadsheet. And again, we're going to show you how, again, with the link, if one click, and it comes out here. And by this right now shows you a histogram, and the histogram shows you which commodities are up and by how much. Right now, the big loser on the day is natural gas, which is down 2.41%, probably because the weather in the U.S. is getting a little warmer, and we got rid of the cold, so you're starting to see that move. And again, this is euro currency. Now, one of the things that you can put in here, which I recommend actually, is you can put in here and just type in long, and we can put this in at the end. Well, I want it at the end. Let me just put this up and then move it. And what this is, and then you can open this up, and this just gives you the name, so you know what you're dealing with. So instead of calling it EU6, you can see that it's the euro currency, T-bonds, soybeans, live cattle, gold. Now, once I open this, I can put it back to where it was with this little button right here, which restores it to its original level. So this kind of gives you an overview of where the action is for today. EP is down, but it was up most of the day. If we go down to this chart, and let's make it a 15-minute chart, you can see that this has been up all day. This is a unique day today, by the way. You'll see it again on President's Day, but when we have a holiday in the United States, Monday it traded electronically, but all of the trading Monday is included in Tuesday because of the holiday. So what you're seeing now is the difference based on Friday night, and what you see on this chart includes, going back, it's going to include, for today, it's going to include Sunday night, all day Monday, Monday night, and Tuesday. And this has been up all day. At its high, it was up, it broke 2,800 on the Dow, and it's now gone down for a nice period of time. I will be showing you some ideas of some kind of studies that you can look at that'll give you an idea, but really quick, here's a stochastic. and you can see where it just went straight down. So that's an important aspect. If you want to, just by putting in a 60, we can go to an hourly, and now you can see from the 12th, which was Friday, it went straight up until 9:30 this morning when we opened in the U.S., and then it's been selling off almost all day. So gives you a good idea of what's going on, and being able to see visually what the markets are doing. So you can set these things up any way that you want, and you have quite a bit of time in the practice mode. Now again, the flexibility here is primarily coming from those that are using the IC, the integrated client. Now the integrated client has to have a Windows program, whether it's on an Apple or whether it's on a Windows program. It only runs on Windows. The web view, the one I will show you, at least show you how to get to it, that one will run on anything that is connected to the internet. But the one that has the most flexibility, and you have all the flexibility, is going to be the IC. Okay, so we have this. We're going to take a look briefly at the chart here. I will start a new page in a minute or before, and then we'll take a look at each chart. But I'm going to put up one study that I happen to like a lot, and this is called the cloud, and it represents basically the support and resistance. I am going to change the color on mine, though I know we have a lot of people who come from the Pacific Rim, and in the Pacific Rim, red is bullish and blue would be bearish, but not me, not here. We basically use green, and red. But we definitely have a different view of the color. And one other thing I'm going to do on mine, just for I just changed that a little so it's not as hard to see, and I'm going to take these two things off and set my default for this so that and up I want to be green and down to be red. Okay. So if I spread this out, you can see that the candlestick, and by the way, for any of these, you see this little question mark up here. You can left click and point to the candlestick. It gives you charts. You can go to chart types, and this will explain the candlestick. We're also going to show you some of the other ones. I'm going to show you quickly constant volume bar. I'm going to show you the Renko bar. I'm going to show you a T-flow, and I'm going to show you the range bar. And the reason I'm going to show you those is that those are untimed. And when the markets get slow at night, they paint a little bit different picture, but one that the mathematical indicators that you might be using do not get mathematically out of shape because of lack of liquidity. So we're going to go over a few different types of charts. But for right now, this is a cloud, Japanese cloud, Imuku cloud. The button is IMOKU. And you can see how, and why I like this, is the market sold off. Where did it sell off to? Right into the bottom of the cloud or the bottom of the support area and stopped. If we assume that this is still in an up market, that's exactly what it should do. It should sell off but be held by this cloud anywhere from the top to the bottom. This is perfect. It went through the cloud on the bottom, back up into the cloud, and remains still solidly in an up move, even though we're down 7 points for today. So this would be a typical chart. I will show you some other charts and some other types of studies. Because everything is a little small, if I right-click in here, I can click on Display with Vertical Cursor, and that box goes away. And if I left-click and put up a cursor, it comes back. Right-click, take the cursor off, it goes away. So we now have the indicators, and you have to make, as a team, 10 trades a day. And the 10 that could be 10 trades, could be buying 10 lots and holding it. Or you could buy 5, sell 5. You could buy 3 contracts of crude oil and 5 contracts of natural gas and 2 contracts of the S&P. All it has to do, it has to add up to 10 trades a day. And the reason we do that is because we want everybody to get the experience of trading, not the experience of buying and holding. So there is a minimum requirement. You could go in and buy 5 and sell 5, you'd be done. We do not permit black box trading or automated trading. And again, the reason for that is that we have people coming in a wide variety of experiences and levels. And we want to make sure that everybody has the same experience, and so we don't permit anybody to have the advantage of writing an algorithm that just trades all day while they're in class. And you miss the experience of reacting to live data, reacting to the news. And that's really interesting. You hear on the news that somebody said something, you can watch what that affects, how it affects the prices. You have energy stocks that come in every day or every week, and you can see, number one, you can see from the news what is expected in these numbers. And then you can see where these numbers come out, and then you can see what the effect is on the market. And you're going to find out that the important thing is how the market, the numbers come out compared to what was expected, not compared to what they were a week ago. And then with the S&P, you know, we're going into earnings report season. And when you go into earnings report season, again, these things move markets. So again, this is what we are, that's part of the experience, is seeing how in real time different occurrences, whether they are geopolitical, whether there's somebody making a wild statement in the U.S., how does it affect the markets? Or does it affect the markets? And we have in the area of ag economics, as you can see, we have grains and meats. And in the metals, we have gold. We have 2 energy contracts. We have the S&P for the stock market. We have a currency, and we have a fixed income. So we're trying to cover all asset classes. You're not required to trade everything. You can trade whatever you want. And you can go to the symbols list up here, and you're going to find out you can trade spreads if you want to. There's spreads. Here's CME on Globex. And you can see lots of these here, but if we put in EU6, you get the currency. Then you get, notice the W3, that means it's a reverse calendar spread. What is a reverse calendar spread? Well, a normal calendar spread buys the front month, sells the back month. The reverse calendar spread buys the back month and sells the front month. So when you see EU6W1 right now, and it's trading March, it means that it's going to buy June and sell March, because that's the next contract out. So you can trade spreads if you want to as well. And all the symbols are here. And all you have to do is put in this symbol, and you can see all the rest of them. When you go to EP, you'll see, well, that's not on this, but the EP has, oh, that's the mini, sorry. Here you have, I mean, all kinds of different, you have some futures contracts with the spreads. We don't do options here, but they actually have an option, Monday option, Wednesday option, Friday options, monthly options, month-end options. They have just a huge choice. So it would pay to look and spend a little time and decide what you're going to trade. And all of that is in the symbols finder. On the studies, if you go and click on studies, you get all these. And on any of these, if you click on it and go to info, you'll get a nice description of what you're looking at. Well, obviously it's meant for a bigger screen than I have, but you do have the explanations here of what they are. And let's see if I can now get it closed so I can go on. I'm just going to go over here so I can be so nice as to close it. Okay. So any of these things you can click here and just hit info and get a description. We also have custom studies, and you can look at some of these. Some of these that are here are written by people, so you may not find it there. But this has all kinds of, and you have the ability to write your own studies. This is one that is very common that I wrote. Wrote it mainly to save space, but it looks busy, and I can explain this at a later time if people are interested. But what this does is it shows you what, whether a trend is strengthening or weakening. But it's like a volatility measure. When it's going up, this trend is strengthening, but you have to look at the chart behind it to get the direction. Now you'll notice that this is going down. That means the trend is not necessarily changing, but it's not strengthening. And what was the market doing? Going sideways. Now the market ran up a little bit, but notice that it was so strong that when this whole down market occurred, it was actually weakening uptrend. It wasn't even calculating as a long. But as it started to last couple of hours, it started to strengthen in the down direction. So this is, and a lot of people use this to decide whether to follow the trend or not follow the trend. So there's an awful lot of studies here. You can Google any of these things and get a pretty good idea of what you're looking at. And then here is the trade. This is the order ticket. And what you see here are the prices in the middle and the bids and offers at each of those prices. So right now it's 27.80 3/4 at 81 even, roughly all over the place. Obviously 148 on the bid, 133 on the offer. One thing that's interesting about the S&P, and this is true of a lot of things, it's always good to look at this. If I go up to TNS, which stands for time and sales, and I go to time and sales, I'll get the S&P, and then I click on volume, and I'm getting the volume of trades. Now I'm going to click on the word trades, and look at this. I'm going to spread it out a little bit. This is showing you bids and offers. And notice 200, 300. It's not unusual to see 1,000 go by. Then when you click on this again, you're seeing only trades. And look at the vast majority are 1, 2, or 3 lots. Once in a while, you see a 49. And by the way, this is the seconds and the microseconds. So it's 1558.08 seconds down to 3 digits. And you can see how fast this is going through. But the one I wanted to show you is that most of them do not have large numbers. Most trading of the S&P are, in fact, small. So you can set these buttons, and I'll run through those really quick. But here, if we go to 5, well, actually, it's on 6. So we can set this to be incremental, or we can set this to be additive. In other words, it's at 5 now. If I hit 5, it's not going to show 5. It's going to show 10. So this is additive. So it's set at 5 now. And if I put a price up here, what's the most apt this going to be? It's probably going to be a sell limit order. That means the market's here, but I'm not going to sell it unless it gets up here. And that becomes the biggest button. So it's telling you what the most common order. But some people may already be in and want to stop. So here's your stop. Buy limit would tell you immediately that it would be filled immediately because it's at a better price now than this. So you're not going to see too many people using a buy limit above the market. You want to just go to the market. Here's buy the market. This is join the offer, which is the sell. This is join the bid. And the same on this side. Sell market, sell the bid, sell the offer. So it makes it a little easier because it's buttons. You also have day orders, but you also have good till cancel orders. You have stop, but you can also put in a trailing stop. What does that mean? That means that if I'm in a trade, I can go down here and I can put in a stop order right over here that's 5 ticks, and I'm long. That means that if the market goes up, this will move up. And as soon as the market turns around and comes back 5 ticks, you're no longer in the trade. So this allows you to take your profit and still be protected. And if the market goes up 5 ticks from where you got in, this we would call the break even, and you wouldn't lose on the trade, no matter what happened, unless it went through so fast you couldn't get filled. So if you go over to trading preferences, it's a few things to show you on trading preferences. You can look through these, but most of them are pretty clear. Knowing that a limit order, if you're selling, a limit order is above the market. If you're buying, a limit order is below. If you look at a stop order and you think of stop loss, then you know where it is. If you're long, meaning you own it, then a stop loss sale will be under the market, the opposite of the limit. And if you're short, then you're going to be stopped out by buying above the market. These will be turned on. The inside market, the buttons that allow you to sell at the market and market orders and things like that, which you already have turned on. Now, let me see where I am. This is what I was telling you before, increment, decrement, or replace. In other words, if you want these numbers to be actual numbers, put in replace. Now when I hit a 10, whoops, let me close this. I have to apply. By the way, when you change anything here, you have to hit apply. See, now when I hit 5, I get 5. 10 gives me 10. It doesn't give me 15, which it would have if it was on increment. Another thing that I want you to do, let me see if I can get to it here. First of all, take a look at the smart orders and take a look at what an iceberg is, a bracket order. A bracket order allows you to put a limit order in and also at the same time put in a target and a risk. And you can put it in by either ticks, which is the smallest increment of the market, or you can put it in by money. You just have to change it. Profit, price, or tick. OCO is another one that you probably use. That's one order cancels order, or one cancels the other. And that's if you want to move your price, and I'll show you an easier way to do that. Market, if touched, you might use, but these are just different types of smart orders that you can use to trade. So it would be smart to go over, look at these, and see if there's anything there that would fit your style of trading. And again, ideally, we'd like to see everybody who is on the team get a chance to trade. Not just one person doing all the trading. Now, one of the things that I wanted to show you because it confuses everybody. If you open up an orders and position, let me go back. I didn't. I don't know why these all opened up because I wasn't looking at that. Where's my page? Oh, sorry. It went to another page. I want to order up the orders and positions. Okay. Let me put it up here. And the only reason I'm opening this up for you, this shows you the open position and the account summary, the margin. We up the margins. We up the amount of money you have in your account this year, but you'll find out why. You're not getting $3 million, though. And this gives you your working orders, your filled orders, your controlled orders. Now, first thing I want to do is I want to go in here and I want to go to display and I want to put on because every day that you trade, we're going to remember every trade your team made. And if you want to keep a record, you can right-click here and go to Statement Report and either create a statement in a Excel spreadsheet or an HTML printout. And that would allow you to check every trade. The other reason I wanted to open this is that in commodities, it's common to have intraday trades matched before overnight trades. And the reason that they did that, is because the guys that traded on the floor got a much cheaper commission. But it confuses people who haven't done this before. So I recommend going in here and unchecking match intraday positions first. And then all it does is normal FIFO. In and out. First in, first out. So you go into orders and positions, account settings, and uncheck match intraday positions separately or first. And that'll be a lot easier for you to understand. One other thing that I did forget to show you is in the trading preferences, under risk, you'll notice that it says maximum order size 1, position 1. That won't work. I don't care what you put in. It's a fat finger protection. But if you put in 1, you're going to get a statement every time you place an order that says you've gone over your limit. And that's going to just slow you down. So you want to go in there and make sure that that is set. And the only thing that's going to control your margins is how much money you have in your account. And you can on anything here, let's go to EP, and you can go to More, and go to Contract Specs, and you will be able to see down here what the margin is. So let's say you have $100,000. Each one of these is $4,500. So you don't want to spend all your margin, because then if the market goes against you, you won't be able to trade. So let's just say you bought 10. That would be $45,000. Now, as long as you've got $45,000 in your account, you can trade 10. If you started with 100,000, you could actually trade 20, but then you would have very little money in case the market went against you. Most funds trade about 50% of their available money, but in these competitions, if you're looking to be competitive, you probably are a little more aggressive than you normally would be in a real trading situation. It's like all or nothing. Okay. I'm going to save this and go to a new page. And again, anybody has questions, feel free to type them in. All right, I'm going to go to a constant volume bar. And I'm going to type in 500. That means each bar will be 500 contracts. And I'm going to go into display, and I'm going to make it a candlestick. Set the default, and hit apply. Now, the S&P does a lot. You could easily go to 2,000, and you'll get a different chart. But every bar will be 2,000 contracts. If you were to put up volume, oh, it's already there. Well, this volume study may not work on this one. Let me put it open. All right, let's go in here and go to all study parameters, contract, 200 levels. Well, it would show that the volume was exactly the same on each one of these. I have a volume contract that does work on untimed charts, and it would be 2,000 straight across the top, every bar. Whereas if you were to go and just put in a bar chart or a candlestick chart and put that in, every one of them would be different. The volume on each one of these would be different. But on a constant volume bar, they would all be the same. So, and you can see the difference. This is a timed 1-hour chart, and this is untimed 2,000 contracts per candlestick. Now, it works with clouds, looks a little different. It works with any of the studies will work with this. I'm just putting a few of them up, but anything will work with this measure. And the advantage is that when you get to a holiday or overnight, you'll notice that the only one of these that are like this usually indicates the end of a session. That's the only time where the volume is not 2,000 contracts. And look at this. If you were trading this, now we've been in a tremendously up market. But if you would have been trading this, it came out of the cloud, it tried to go through and failed, and you sold it here, it would be 70.92, and you'd still be in it, still be in it, still be in it, still be in it. Worst case scenario, you got out here at 27.75. And we could actually go in here and go to pointer tools, currency. We could just click this. Because the one thing you do have to realize in untimed that sometimes you get a little bit off on how much you think it's worth because the scale gets really small. But getting out around here, you're looking at $860, $807, almost $900 per contract. You do 5 of them, you got $5,000. So you get an idea of, but the cloud told you that you wanted to play from the short side. Even though this market's been going up for so many days in a row, your instinct would be to go the other way. But this would show you not. And here you can see that it's been above. It tested the support level, but never went through it until here. So it kind of gives you a little context to trade. But this is called a constant volume bar. Now you have tabs up here, by the way, and you can keep adding them. This is called a range bar. Again, it's untimed. Now on this one, every bar is 5 ticks. I'm going to make it 8 ticks. And the reason I'm going to make it 8 ticks is because there's 4 ticks to every whole number in the S&P. And I'm going to modify this and again make it a candlestick. So every one of these from top to bottom is the same as going from 2790 to 2791. 92, I put 80 in, I'm sorry. Every one of these has, but there's no time. It may do that in 30 seconds. It may do that in an hour and a half. But every bar is 4 ticks, 8 ticks. Untimed. And again, I can put up the cloud. I could put up the ADX with DMI. And again, you see when this was going up, the market was going down. This told you that the market was strengthening in the down direction. The next one I wanted to show you, and I'm going over these quickly, but I'm hoping that you'll take the time to go through the help menu and see what we're talking about. I'm going to change this a little. This is a Renko, and I'm going to check off Show Wicks, and I'm going to Scalable because it makes it easier to see. Again, I set my default, and I'm going to put in an 8 here as well. Now, it's similar to the range bar, except that in this case, you get a new brick if this market goes 8 ticks above the high of this red brick, you get a green brick. If it goes 8 ticks below the low of the previous brick, you get a red one. So the difference is based on the high and low of the solid part. The wick part here shows you where it actually traded. When you get up to the top, you'll notice that in many cases, you're going to find long wicks when the direction changes. That means when we came in here, the buyers were in control. By the time we left, sellers took over. Down here, sellers came in control. They came in, they pushed the market down, but they couldn't push it down 8 ticks. It reversed and went up. So we kind of like to look at the wicks because the wicks tell you where it traded outside the 8 ticks that it took to make a new brick in either direction. And again, you can put up the cloud or any other study that you choose to put up. But again, this is an untimed measure. And that means that when the market is moving, it takes very little time to make a bar. When it's not, you could sit on the same little bar for 15, 20 minutes. So it compensates for the fact that we trade 23 hours a day. from 5 to 6 in New York, 4 to 5 in Chicago, there's no trading. That's on the CME group contracts, and that's when they're doing any kind of computer work and upgrade if they have to. 23 hours a day we trade. Okay, the only other one I wanted to show you, because it's unique, is a CQG study. Actually, let me take this off and make it a little different. That's smoothing. I want to go with a bar first. And this one is also untimed, though there is a timed version. And this, the color, the brighter the color, the more volume. And then it's colored to show you how many of the contracts in that time segment were lifting offers, which means the buyer was willing to pay more to the seller because they want to get in it, and how many of them lifted the bid. And that's when they lifted the offer, when they hit the bid, it means the seller was willing to take less to get out. So hitting the bid is red, lifting the offer is green. And so you can see, and you can get the same thing by going here. Well, this one on this version wasn't doing the untimed, but you can, we have them to do. And what they'll do is that they can also show it to you as a histogram. But if you point to it, you can see AV, BV at the volume, because, you know, to the naked eye like mine, most of these look like, a lot of them look like they're 50-50 when they're not. But here's one where you had 38.90 lifting offers buying versus only 478 sellers. And you can see it in the coloring. Up, up, up. But you can start to see when selling starts to come in. This is almost dead even here. Selling actually never really came in, except here. And that wasn't by much. But this incorporates volume into the chart based on both the brightness and the thickness. And again, you can right-click and go to Modify, and you can see here the 90th percentile, the 50th percentile, the 10th percentile. You can also hit Info from here and get the information. You can also do trading ranges instead of just prices. And now it's set at 10 tick. The range on every one of these is 10 ticks. But you can see where the volume came in. See, this one is more descriptive on volume. You had a lot of volume going up at the beginning. You had no volume on the way down, but even all the way down, it wasn't heavy volume. If it's not heavy volume, then most probably it's not as important. So you can see the trading range, and you can see that there wasn't a lot of volume within those ranges. Now it's starting to go back up, and at least at this point, we're starting to see more color. So there still seems to be an upward bias, even though the market is now down 5.5. This is called T-flow, and it's trade-based. So we looked at constant volume bars, S&P, 8-tick T-flow. I actually took the other ones off. I replaced them. Renko and range bars. And these are your most common untimed indicators. Now, I mean, we could go on for hours on looking at different types of charts and everything, but we have only so much time allotted. So I'm going back to the first basic page, and I'm asking if anybody has any questions over what we've discussed so far. Just type it in on the chat, and we will we'll answer that. Ooh, none at all. I do want to show you, since at this point there's no all clear. Okay. One of the other very common trading interfaces is called the ladder, and on this one there's no buttons. There are buttons on the top, but if you want it, you just go over, pull it over, and it will tell you that it's a limit order. And oh, wait a minute, this is a spread. Hold on, let me put it in EP. And I let go. It keeps defaulting to my fixed income one, which only can trade fixed income, which, okay, and you can see right there, there's a little limit button. And it tells you, place sell order at 27.85. So you can say, place order. And you'll get an alert that it's in. Now let's say that, and by the way, notice it also appeared here, because they're linked into the same account. So it doesn't matter which one you're looking at. Let's say the market starts to move down. You want to. This is called cancel replace. You just take it. No, I don't want to. And you just drag it down to where you want it. Let go. But always read this. We're modifying the order, selling one at 27.85, and now we're selling it at 27.84. Want to proceed? Yes. And now it's here. Notice it also moved down over here. You want to cancel it, all you got to do is right-click it. Or you could even go over here and click it over here where it says working orders, and you could just sit here. Or it's a sell order. You could go down at the bottom where it says cancel all sells, and it's going. I just wanted to show you one other adjustment I would make is if I opened up the orders and positions, and if I go to open positions, this would show me all my positions that are open. And I can go in here to orders and position preferences. And this may take me a second. It always does because they keep moving it. And I go to trading preferences. And there is a place, I think it's on here, maybe not. I'm looking for a place that allows you to put on the bottom, and maybe it is on display. Let me go to the bottom. I'll have to find it for you because it keeps changing. But there's a place where we can turn it on so you can liquidate right from the open positions. But it moves, so I will find it and make sure everybody knows where that is. It's probably checked on mine, which is why I'm not seeing it. But there's a button here that says liquidate from open positions. But I will have to find that and be able to. Oh, here. It's on functions. And you should enable liquidate positions and open position summary. And that means that you'll be able to that means that there'll be a little X here on your open position, and you could click it right here. And by the way, let me put on a position, and I'll show you. Let's just, what are we looking at? EP? Yeah, let's just sell one at the market. And by the way, this is your fill report telling you we've sold one. Now if we go back to filled, or go back to the open orders and positions window, you see there's now a little X here, right here, and I could liquidate it from here. Also, at the top in red, it says that I've sold one at 27.83. If I right-click on it, I can liquidate it from here. So play with this. That's why we are giving you more time this year to get familiar with the trading and the stops. If you have any questions, you can send them to the Trading Challenge mailing address at CQG, which is tradingchallenge@cqg.com. Or you could pose a question, but if it's about CQG, send it to us. If you have any other question for the CME, it's trading.challenge@thecmegroup.com. Somebody asked a question about an error in the diode database. My first remark is make sure if you're using a computer at school that, and you can, if you forget, you can go up to the setup and you can look at your connection preference. You have to have port 2823 open. If 2823 isn't open, you're going to have a problem. The top 10%, somebody asked if there's any punishment for what you do in the practice round. No. The only punishment you're going to get is when you get on February 19th, you're going to get a new login and password. And when you start trading on the 20th, you must use the new one. Because on that one, all trades will be recorded for ranking for the competition. And if you don't trade, you can read this in the instructions. If you don't make your 10 trades a day, there will be penalties. If you forget to trade in the new simulator, there'll be penalties. If you trade after the competition ends, or something will be open, there will be penalties. So make sure you know where the penalties are. But we'll be reminding you, and we'll let you know when you get the second law. You just make sure that everybody gets it. Well, everybody will be getting it this time. Make sure that everybody on your team knows when to switch to the new logins because, again, this year everybody will be getting them. And once you get your simulated login and you go to, I'm going to move this over. I'm just going to show you mine real quick. And because I'm going to be doing some workshops on this after everybody gets their logins. This is the web-based product. Whoops. Oh, maybe it's going. And just very quickly, this is called a hybrid order ticket, which you can also use on the IC. This is somebody else's thing that was just in here. So let's see if I can. Okay. Here's EP, and you would immediately be able to get the chart. Here's a chart, not as dynamic as the one on the full IC, but then you have your price and you have your trading interface, very similar to the order ticket, and you can trade this on anything that has an internet connection. And we'll be doing workshops on that once those are sent out. You can also look under trading and you can see hybrid order ticket, which looks exactly like the one I just showed you. And on this one, you can either drag it over or use the buttons. Either one on the same one. So again, you'll be getting that before the competition. Again, right click and I'm going to liquidate. And now I don't have a position if it went through. What does this say? Oh, it's done trading for the day. So I can't liquidate it right now. I have to wait till it opens again. CQG. Yeah. And if you're having problems with that the diode database and it's not the correct port, send it to Trading Challenge at cqg.com, but give us contact information so we know who we're talking to. But before you do anything on that, try rebooting the computer and do it again if it's your first login. We've noticed that in one of the versions that is a little defect that they fixed in the next version, that the first time you log in, you get an error, but if you just log out, reboot your computer, and do it again, it works fine from then on. So you can try that. Those are the two things that I would try. Make sure the port is open, but if it's your computer, that's not an issue. If not, reboot the computer and try it a second time. It should work. Otherwise, we have a support staff to help you. Thank you very much for attending the first webinar. The other webinars may be similar, but probably flow a little better. And you'll get a chance, and you can ask questions anytime you want. And again, on behalf of the CME Group and CQG and Dow Jones, and by the way, Hightower, let me just show you that really quick before we leave. If you go to Hightower, if you go up to all sources and uncheck that and just do Hightower, this is what Hightower gives you every day. Every day you'll get comments and statistics on the markets, all the markets that you may be. This happens to be hogs, but they have grains, cattle, energy, technical. They tell you what reports are coming out. Those are available every day. And we have another set that I think we're going to be available on our social media sites. That'll be posted twice a day. These are the kinds of reports that people who trade this every day actually subscribe to. So we're going to make those available for you to use during the competition. to make this a very real experience in every single way. Good luck, and I hope to see some of you in Chicago on the day of education for the winning team. Good night.